Hey, 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 it's Rebecca, and you are listening to Resilient by Design. Today is a very special episode because I am interviewing my very own operations manager, Merilee Wright. Merilee and I have decided to team up and do a 3 or 4 part series yet to be determined. Initially, it was supposed to be 1 episode. So I can tell you actually, Merilee and I recorded an episode. It was an hour long and it was so much information. As soon as we hit stop record, we both looked at each other. We were like, that's not going to fly. It was like numbers, financials, and forecasting. It was like making my head spin and even her head spin. So we said, no. This is too much information for one podcast. We're going to break it down so we can do the building blocks. You guys know, if anyone here has done any of my courses, that I'm all about structure and planning it so that it's one step at a time. I want it to be something you guys can listen to. You can take action. It helps to clarify your knowledge and your understanding of financials and numbers. And so today we're going to do part 1, which is all about project profitability. We're going to share with you and break down terminology, give you some definitions, some examples, and talk about how you can calculate your own project profitability inside your design business. So I hope you guys enjoy this episode. All right. I'm Rebecca Hay, and I've built a successful interior design business by trial and error, podcasts, online courses, and so many freaking books. Over the last decade, I've grown from an insecure student to having false starts to careers, and now I'm finally in the place where I want to be. Throughout my journey, it's been pretty obvious that I'm passionate about business and helping other entrepreneurs do the same. Each week, I'll share tangible takeaways from my own experience and the experiences of other badass women to help you build your confidence and change your business. You guys know there is nothing I love better than staying in my all-day PJs all day. Abode has launched my new favorite set of buttery soft pajamas that come in 3 fabulous colors: snow, camel, and my personal fave that's on the thumbnail for this podcast, midnight. I feel so put together, whether I'm recording a podcast like this, meeting a client on Zoom, or tucking myself into bed with the kids at story time. And as you all know, I'm a pretty big fan of the classics when it comes to design. And that translates to literally everything I purchase for my own home decor and my clients. And of course, my fashion. Abode also has the perfect luxurious 100% cotton, timeless bedding. It pairs perfectly with my chic all-day PJs. You gotta invest in your rest. Check them out at lovemyabode.com and type in Resilient10 for $10 off your very first order. Treat yourself to the perfect pair of luxurious all-day PJs and soft cloud bed linens. Well, hello, Merilee. Welcome to the podcast.
Hello, Rebecca. Thank you so much for having me today. How are you doing?
I'm good. This is so funny. Usually we're in the office together, but today we're on opposite sides of Zoom. I'm at the collective. You are at home recording.
That's right.
Yeah, it's exciting. And this is probably the first, well, maybe not the first time, the second time I've had somebody who's part of the RHD team come on the podcast. But this time you have knowledge that we haven't shared here before.
Well, I hope I can provide some information for your listeners for sure.
Absolutely. So before we dive in, in the intro, I mentioned that this is the first part, multi-part series. I'm not going to commit to how many episodes yet because we're still sort of figuring it out on sort of finances and profitability. But before we kind of dive in, why don't you just share with my listeners a little bit more about your background and who you are and how you came to me?
Okay, great. So Merilee Wright is my name, and I would say my game is everything to do with business operations. I have a passion with working with entrepreneurs and small to mid-sized businesses to help people continue to grow their businesses and be successful in their aspirations. From a background perspective, I'm a former chief operating officer for an organization that became the sixth fastest growing company in Canada, one of the years that I was there. And prior to that, I worked for quite a number of years at one of the big banks at an executive level. And I was fortunate enough to go back to school when I was in my 30s to do my master's in business administration, and have been working, full time for basically since I finished high school, and various levels of responsibility, and now like to help entrepreneurs.
So let's tell everybody how you and I, let's just say, found each other. Why don't you start?
Well, I also invest in real estate. I find that to be a very sound way to build my generational wealth. And one of the properties that I purchased, I wanted to renovate, and someone that I was working with had recommended you as a designer. And I'd never worked with a designer before. And it was a fascinating experience. And that's how we met, probably about 7 years ago, I guess. And when we were done, we kind of stayed in touch after that.
Totally. It's so funny. It's like, to back, it's interesting too, because when I designed your house, your renovation, my company and my business looked very different than it does today. Right? Wouldn't you agree?
I would agree, because back then we worked in an office that was in your house, and now we work in an actual office.
Exactly. Yeah. And what I think is so interesting, and I have mentioned it before, sure, I don't remember where I say things anymore, but I don't know if I said it on this podcast, but I've definitely said it to my Designers Room community, is that you and I connected. Like when I was designing and doing your renovation, I don't even know how we started talking about business. Maybe because I was just discussing, I had different business coaches that were in the design world, and I was learning, and I was sharing a little bit of that with you. And then you got really excited, and you started talking about business too. And then I remember you sort of talked about, I'm not going to get ahead of us, but you did talk about things like forecasting. And I remember thinking, like, what the F is that? I don't know what that is. I definitely don't do that. And then you would sort of throw out some terminology like, oh, well, like your profit and your net and your margin. And I was like, oh man, I feel like I should know these things, but I don't know them. And so you started sort of coaching a little bit. We did a bit of, what do you call it? Like an exchange of services where you needed a little bit of additional design advice. So I kind of would do that. And then you would kind of walk me through a spreadsheet, or I remember you came to my home office at the time, which then turned into Joseph's bedroom because I needed the bedroom. But you came, and we had like those large flip chart papers stuck all over the wall. Yep. And we were like writing things out, and you were basically teaching me, I think, like Finance 101.
That's right.
Because I wasn't tracking anything. I did not know my numbers. I had no idea how much I was even paying myself, how much we were making, if I was even making a profit. Like I knew nothing. I just knew that if I kept going and got more jobs, the business would keep growing. And I just kept thinking, I'll just get bigger jobs, and that will solve all the problems. And so you and I did that. And then there was like a time where I remember saying like, oh man, one day, Merilee, like I could only dream to be able to like hire you to like work with me. And like, you say something thinking there's no plausibility of that happening. And here we are. And then you came and you're like, hey, you're looking for an operations manager. Maybe I can help. Like, what? You're so overqualified.
Yeah, it was very fun. I mean, I remember doing that, and I absolutely love doing that. I love when people things click. When you get that aha moment and you realize that things click. And we probably, one of the things we probably talked about was you can't. It's not a long-term building your business solution to manage by what's in your bank account. You really need to know your numbers. You need to know how the money that's in your bank account ended up there, and whether or not you're going to have enough for the future of what you're trying to achieve. Whereas a lot of entrepreneurs, as you mentioned, if they have enough money in the bank, they think, okay, well, I'm doing okay. But that may be true and that may not be true. You really need to know your numbers. And so I really enjoyed that time. And one of the things, and one of the reasons when you were looking for someone, and I said I was kind of retired or on hiatus or pick one. I'm not really sure what I call myself at this point. But it was in the pandemic and I wasn't really doing anything, and said, well, I'll help you out for a little bit. But one of the reasons I was happy to work with you is because you're one of those entrepreneurs that, even though numbers are not your favorite thing to deal with, you took the lessons to heart and really said, you know what, I understand that this is important for my business. So I'm going to do the work, even though I find it painful. I'm going to do the work because I know it's important.
Yeah. And I think you said that to me at the time, and that really resonated with me too, because it made me feel better that, okay, it's okay to not know everything. What matters is that I put in the work.
Yeah.
And you see that too, like in our design community, or when we launch Power of Process again, the students that go through, and it's the students or the designers that show up, or they show up every month in a designer's room, even if they don't have anything to say, but they're there and they're absorbing. And then when we talk about it, they do exercise or they do the work.
Right.
And those are the ones that I see, like everyone sort of starts off at this level playing field, but when you take the time to do the hard things that are going to move the needle, those are the designers that I'm watching in real time, which is so freaking cool, which I'm sure is how you felt about me.
That's right.
But like just take off.
Yeah. Absolutely.
Yeah, so cool.
Absolutely. You have to put the work in. It doesn't have to be excruciatingly painful. And for creative people who find numbers not just intimidating, but boring, or, pick a word, just starting somewhere. The best part of spending a little bit of time learning the financial part and the numbers of your business takes some of this scary factor out of it. Like you don't want to keep running your business going, I hope I'm doing the right thing. There's a point at which you need to find a way to figure out if you are doing the right thing. So that, because again, you want to keep doing the things that are working for you positively and start to reduce the things that are working against your success.
Absolutely. And then really the first step is figuring out what those are.
That's right.
Right?
That's right. Exactly.
So we talked about why it's important to know your numbers. I want us today to get into like the specifics of project profitability, because I know you and I have had a lot of conversations leading up to this podcast, trying to figure out what would be the most useful stepping stone to kind of build on. And you and I both agreed that like really understanding a project at a time before we dive into overall company finances and overall company profitability, you need to understand it on a project basis. So what is it when we talk about project profitability? Like we're going to walk everybody through terminology. And I just want to let everyone know, because I haven't said it yet, that we are going to have, or there should be, by the time this airs, a downloadable PDF that accompanies this episode, because I know myself as a designer, when it comes to numbers, it's one thing to hear them, but they tend to go in one side and out the other.
Yeah.
And so having that paper, and if you're at your office at home right now and you're able to print it and follow along, awesome. If not, don't worry about it. Just remember that it's there so you can go and download it after. And I'd like to give you guys that hyperlink to what it is, but it's in the show notes. It's likely, I'm not going to say it because I'll be wrong.
Yeah, there you go.
Okay. So anyhow, let's talk about what is project profitability.
Right. So, you and I have used the term a lot in the short time we've been talking on this podcast about know your numbers. And, it's so important. And the reason I would suggest you start with a project is because if you haven't been spending the time to really dive into the finances of your business, that can be very, very daunting. And in the type of business that a designer does, it's all project-based. So instead of trying to get your arms around all of the pieces of all of the financials of your business, if you haven't done that, start with a project, because you understand what a project is. And you understand that there are sales that you make, there's revenue that you generate, there's fees that you charge, and then there are costs or expenses associated with that project. Because you're project-based, if you understand how to properly price your project, that will go a long way to helping make sure that your projects are profitable and your business is profitable.
And, when you're looking to hire, because a lot of designers are always asking, like, how do I know when I'm ready to hire? How do I know if I can afford a freelancer, someone on contract, an employee? I would say, and this is what I'm still learning with you, is really understanding that project profitability so that then you can to forecast and understand, okay, if I plug in somebody at a certain rate, will I still be profitable? And we're going to get there, not today, but we're going to
not today.
Get there.
Yeah. So I would start with any historical projects that you have, and make sure that it's a project that's complete, because you'll have all of the information. And I mean, if you don't have it down to the last receipt and the last penny, I wouldn't really be too fussed about that. Right now, you're just trying to grasp the broad strokes of making sure your projects are profitable. And so when you look at it, I mean, the top line of any project is the terms that we tend to use are sales or revenue. And I would suggest that you think about the total revenue that you are generating from a project. And so what is revenue? So in your world, the revenue would be made up of your fees, so what you're charging for your time, and the value of the goods that you're selling to your clients. So if you have a project that is 100,000, let's say your let's say your revenue for the project is $100,000, then that could be made up of, let's say, $75,000 of that was the goods that you sold to the client, and $25,000 were the fees that you charged for your time. So the two of those together equals the revenue that you generated for that project.
Yeah. So it's everything that you're it's the selling cost. It's the selling price.
It's the selling price of the goods that you're selling to the client and the fees that you're charging for your design time.
Okay. And that is retail value or whatever you charge your client.
That's right. And some people
make it super crystal clear.
Yeah. From a terminology perspective, some people will call it revenue and some people will call it sales. I would recommend using the term revenue so that you can, in your own mind, distinguish between the sales of the goods that you're selling to the customer plus the fees that you're charging for your time. So the two of those together, the sales of goods and the fees that you're charging, is your total revenue for the project.
And that would be all fees. So your consultation fee, if you have a process like mine, it's broken down into phases, it's all the fees, the design fees, and then the implementation fees or project management fees. It's if you charge hourly or you're flat fee. It's the whole kit and caboodle. At the end of the day, this is what the client has paid you or will pay you.
So if you're looking at a project that's finished, you're going to look at the total of all of the fees for all of the stages of the project that you invoiced or charged the client. That's your fee revenue. And then you have your sales of your goods. So you add those two together and that gets you the total revenue that was generated by that project. So think of your total
if you guys are following. Yeah, so I was just going to say, if you're following along on the PDF, you'll see a little definition as to what it is and an example. So that's helpful.
Yeah. So total revenue for a project is sales of goods sold to the client and your fees.
Awesome. Okay. That's where we start.
Where we start.
Start at the very beginning. A very good place to start. Anybody know where that's from?
Nope.
Seriously?
No.
Sound of Music. Classic.
Oh, yeah, I think I've watched that once in my life.
Oh my God. It's like, I love that movie. I could watch it any day. Okay, so let's move on. So first we start with the revenue. Then what?
Yeah. So then you have your revenue. And now that we've discussed, it's made up of two components in a project, sales of goods and your fees. And so you know that once you calculate that, so let's use the 100,000 example that I started with. You know, though, that at that 100,000, you say, well, that's a lot. That's it's a great project. But if $75,000 of that revenue was generated by selling goods to clients, you don't get all of that money because you have to pay for the goods that you purchased to sell to the client. So what you need to do is you need to take that amount and you need to minus from that the cost of the goods that you sold.
Okay, let's just stop there for a second. I feel like this is an appropriate time to tell everybody who's listening that when you first told me this, because that was the first time I'd ever heard of this term, cost of goods sold / also known as, AKA COGS, like a cog in a wheel, COGS. I was like, what are you talking about? I have never heard of this. What is this term? You were the first person, Merilee, to teach me about this like 5 or 6 years ago, whenever it was. So if you're listening and you're like, the what now? Yeah, I got you. You're not alone.
Yeah.
And actually, there is a store on Queen. I think it's Queen. Is it Queen or Gerrard East? That's like, it's the name of the store is COGS. It stands for something else.
Right.
But I was doing a project in the East End right after you had taught me about cost of goods sold. And I'm driving along and I saw it and I was like, it's a sign. It's a sign. Because it's like anything, right? Like when you start paying attention to something, you see it everywhere. Like when you are going to have a baby, everybody's pregnant.
Oh, that's right. That's right.
You know, it's like, or you get a blue car and it's like, oh my God, there's so many blue cars.
That's right. Yeah.
Same concept. I was like, COGS. It was like, everywhere. Anyhow. So guys, this is an important term. Turns out. Don't feel bad if you've never heard it before.
Yeah, it's very important because you've got to know, like if you're looking at a historical project and you say, okay, well, so this is all the revenue I generated from the project. Well, that's great. But then you have to pay for everything. You have to pay for stuff from that money that you received from your client or you charge your client. So for all of the goods that you're purchasing to sell to your client, you have to subtract from the value that you sell it to them, the cost of those goods that you're selling. So if in our example, we had $100,000 in total revenue, that was made up $75,000 of goods that you sold to the client, then you're going to go and you're going to calculate how much did it cost you to purchase those goods on behalf of the client. Now, if you are thinking in terms of making sure that you're going to make money, hopefully you will have spent less to purchase those goods than you charged the client when you sold them to that client. So in this case, our $75,000 that we sold the goods to the client for, let's hope that they cost us only, let's say, $50,000. That would mean that you sold them at $75,000, they cost you $50,000. So then that means you will have $25,000 of profit on those goods that you sold to the client. But it's important to understand, and that's why you separate out how much you're selling your goods for from your fees that you're charging. And that's why it's important to then understand what it cost you to purchase those goods so that you understand, am I selling them to my client at the same price that they cost me, or am I selling it to them for more? And God forbid you're selling less, which I would doubt you're doing. But until you do your numbers, you never really know.
Yeah, I think this is an important opportunity to have a little teaching moment. Talk about this all the time. Obviously, this is nothing new to my listeners, but this is where you see the difference between designers who pass on or share their discounts with their clients and those who do not. For a while, I subscribed to a method where I thought if I split my discount 50-50 with my clients, that makes me feel better, makes them feel better. Then I can maybe charge a little bit more in my fees. And, then there's no resistance because I don't like confrontation. And so I thought this is a great way to not have to worry about, I'm very transparent. I don't have to worry about clients coming to me and asking, well, how much did you pay for it? And it caused me anxiety. And so I shared my discount until I had an operations manager a few years ago. And she was like, why are you doing this? You are leaving so much money on the table. It is hard to make money in a service-based industry if you can't make money on the goods.
Yeah.
And she was right. And I know one of our designers remembers, and Merilee, I think you were in that call when she had this aha moment. And she does a lot of decorating, and that's a whole other topic we can talk about next time, but there's a lot of money to be made in decorating, but not if you're passing on your discount to your client.
That's right.
So she had an aha moment in our coaching call. Merilee was my guest this past month, who was like, OMG, for lack of a better term, I can't even fathom the amount of money that I have missed out on.
Yep. Yeah, absolutely. And that's why it's so important to look at a project at a time and go back and do this work and split the total revenue that you got for the project between fees you charged and goods you purchased and resold. Very, very important, because you'll see, like in our example, if you sold the goods for $75,000 and you do the math and you realize that you paid $70,000 for them, well, now you can see that you only made $5,000 on those goods, which is not a lot of money in the grand scheme of things. But if you and you can look and see, why was that? Did you either pass on the discount, as Rebecca said? Are you not marking it up appropriately? What's happening? Like, why is that number so low? Whereas, but again, that's a relative term. I don't want to get too far down the rabbit hole. In the industry that you're in, I haven't done the research on the industry that you're in to understand what an average margin would be. But having seen and spent some time working in the industry, I see that often a trade discount with a retailer tends to look around anywhere from 10 to 20%, right? I mean, the most common one I see is 20%. So at a minimum, it would seem to me that your difference between what you sold the goods to the client for and what they cost you, if you're not passing on your discount, the difference in those two numbers should be roughly anywhere between 10 to 20% as a starting point.
I have a question for you, Merilee. As a former client and someone who has worked with a designer, because I know people having this thought in their head, like, my clients, they don't want to pay for it, or I can't imagine charging my clients retail. They'll go to the store and buy it themselves. Like, what would you say as someone who has worked with a designer, about the value of having discounts is not?
Well, so I would say as a client, so the first thing I would say as a client is I didn't even know that, having never worked with a designer before, I didn't know that they got discounts, and would never have expected them to pass it on to me because A, I didn't know about them, and B, that's just part of their business model. Is, you as designers develop relationships with vendors, and the benefit to your client is that you have identified vendors that you believe have the right style and look and quality that you know about. But as an average customer, your client, we're not necessarily going to go to those places. We may not find that stuff. We may not be able to pull that look together. So yes, we're paying your time to do that. But part of your building your business and understanding how to find the vendors is that makes it pulls the whole thing together for the client. So that's all part of the work that you do to offer a service. I know I'm not answering this, I think, as fully as I'm thinking it. I do apologize for that. But if I wanted I think that's a different business model. If somebody wants to hire you to give you for you to lay it all out and then give them the list of vendors and then the client can go and do all of the work themselves, that's a different business model. But I don't imagine for many of your listeners that that's what their business model is. Your business model is you're going to do the design and you're going to go and source it and do all of that stuff for your clients. You've developed the relationships with the vendors. That's part of your business model to keep your trade discounts.
Yeah. I mean, what would be the point of purchasing product on behalf of your clients, collecting their money to then, to place all those orders and do all that work if you're not making any money on it? Like, it doesn't make sense. The only way it would make sense would be if your design fees were astronomically high.
Exactly right. And as a client, I can't go to your vendors and purchase the item at your trade discount. I can only go and purchase it at retail. So why would you pass that on? This makes no sense to me. That's part of your business model. As a client without a trade discount, I can only purchase things at retail. So as long as you don't charge me more than what I can go and buy it for myself, for the good, for the product, then fair is fair.
And part of it too is finding your clients and having those conversations early and often about how your business model works. And if they ask you, it's okay to say, don't share our discounts. And you can say whatever you want. For me, I say, I used to share my discounts with my clients, but I found that it wasn't a profitable business model. Yep. And most people will respect that. They don't want to hire you to put you out of business.
Right.
They want to see you succeed as well. And I've had another conversation with past clients, Kelly and Glenn, here on the podcast, and we talk about this very topic where I asked them about the discount thing, and they shared exactly what you said, Merilee. She said that they're hiring me for their expertise, for our expertise, not for our discount. So if someone's hiring you just because they want your discount, you have to maybe take stock. Is this type of client you want to work with, or is this the business model that you want?
100%.
Let's get back to profitability, because if you can't be profitable, what's the freaking point of being in business? It's a hobby at that point.
That's right. Absolutely. And, if you want to share your discounts, then you need to charge higher fees to offset that. Because if you share your discount, you're just taking money out of your own pocket. And, so it's kind of like it's 6 of one and half a dozen of the other. You need to make the money in your fees or in your goods or a combination of both. But if you're not making it in your goods, then you're going to need to charge higher fees. And the problem with that,
way higher fees.
Way higher. And then the challenge that you're going to have.
Because that's what I thought. That's what I thought.
Is you're going to price yourself out of jobs because you're not going to appear to be competitive.
Yeah. Yeah.
Right. So, the point is the trades offer the discounts to you for a few reasons. Obviously, one is an incentive for you to do business with them for sure. But, they know that if designers don't make money, then they're not going to have designers to sell product to. So, it's a symbiotic relationship that you have with your vendors, and that's for you. It's not, I don't believe it's for your clients.
Yeah. Okay. Everybody knows exactly how we feel. Designers, stop sharing your discount.
That's right. That's right.
Tough love coming from Rebecca and Merilee.
Yeah.
Okay. So then what happens? So we talked about a pretend average margin you said would be 20% based on discount from retail. And as you know, sometimes we often, we mark up goods, right? So we'll get a trade price from a custom upholsterer, for example, and we mark that up and we use our discretion.
Yes.
And I know designers who will mark things up anywhere from 20 to 30 to 40+%. And that is up to you, because this is something that's custom and it's not comparable. It does not exist on the retail market.
Yeah.
And you have to make that decision. But I can tell you, the more you're able to work with wholesalers and trades, the better margin you can have, because you can have a larger markup.
That's right.
Then your overall margin might not be 20, it might be 25, it might be 30, right? In our case, they tend to balance each other out a little bit.
Yeah.
And that's a whole separate conversation, is understanding which products have the best margins. That's a great exercise to do. But for our purposes today, that you subtract that cost of goods sold and you get a number. And
That's
what do
right.
we call that?
So when you have the sales that you have, the revenue you've generated from selling the goods to the client, and there's a reason I keep using the term selling goods to the client, because if you've sold them to the client for $75,000, and don't worry about whether or not the percentages, if you do some math calculation based on this, are higher or lower than what we're suggesting. This is just for easy math for this purpose. So if you sold those goods to the client for $75,000 and you calculate that they cost you $50,000, then that means your $50,000 is the cost of the goods that you sold to the client, or your cost of goods sold. And then if you take what you sold them to the client up at $75,000 minus the cost of goods sold, which is $50,000, it means the gross profit, and the term is gross profit, that you make from the goods on that project is $25,000. That's your gross profit. And we call it gross profit because it's the profit before you take off any other types of expenses in your business.
I feel like gross, I never understand why it's called gross. Like, is it gross because it's like grotesque? Because it's like so much profit before there's expenses? Like, come on. Where do these freaking terms come from? Who comes up with these terms? Gross. Is it from another language? Do you know the answer? I'm just going to picture grotesque because it's like so much profit. And then you're like, oh, shoot, I have expenses.
Right. I don't know. I've actually never done the research. An accountant would probably be able to tell you. I'm not an accountant by training, but I do understand finance and financial statements and those sorts of things. But it's just called the gross. I don't know if you want to refer to it as it's the gross amount of money that you make because it's so much money before you have to pay your bills. Whatever works for you to understand it, that's all that matters, right?
I feel like
understand it.
As designers, we're very visual.
Yeah.
We're very visual as designers. So I just keep trying. And it also helps me understand terminology when I can kind of put a visual to it. So I'm going to Google this and I'm going to circle back. I'm going to let everyone know, where does this term come from?
I think that's brilliant. It's always helpful. I'm trying to think of an analogy to what it would look like as a designer, but I don't want to complicate it by trying to make an analogy that then doesn't really work. So we'll let you Google it. So you have your gross profit. So you sold your goods at $75,000 to your client. The cost of the goods that you sold was $50,000. So your gross profit on your goods was $25,000. So now, do you want me to continue from there?
Hold on.
Yeah,
I do, but I want to pause because I Googled it.
Okay, good.
Gross is a noun.
Yeah.
It comes from Old French. It's a French word, gros, douzaine, which is a dozen, large dozen. So large, see gros, adjective, which is the sense of total profit.
Got it.
So gros is French.
There you go. Good.
There you go. See, I knew it came from somewhere.
Well, it had to come from, everything comes from somewhere. And I mean, accounting, and finance is one of the oldest professions in the world, right? Because from early days, people had to figure out how to keep track of what went, goods and services and products coming in and going out, right? So always had to be something.
So gros, for those who speak French, and Canadians, most of us speak French, we know this, gros actually means fat.
Yeah.
To be honest, like fat profit, like I'm not that far off with my grotesque.
No, you're not that far off. No, you're not that. And that's
there you go. Fat profit, guys.
That's the fat before, but that's before we trim the fat, which was what happens.
Oh, yes.
Yes. Because your expenses trim your fat, right? They take your expenses, eat into your profit.
I love it. I'm adding that to our little PDF. Okay, so carry on while I do that.
All right. So those of you who are listening might be thinking, well, what about the revenue from fees? So we're going to get to that in a second. I just really want to make sure that you understand you need to look at the two categories separately. Your sales of goods and then your fees, your revenue from your fees and your revenue from your goods. So you've got so if you remember what we said we've got $100,000 in total revenue that's made up of $25,000 in your fees that you've invoiced your client and $75,000 in goods that you've sold to your client. From that, we take the cost of goods sold, which was $50,000. So we know that our gross profit on goods is $25,000, but we also have the $25,000 of the fees revenue. So if you think of this in terms of a financial statement, what you would have is on the left, you would have a line. Think of it as an Excel spreadsheet. The row would say total revenue, and you would have $100,000. Then below that, you would have cost of goods sold, and that would be $50,000. So your gross profit for your project in total would be $50,000. And that would be made up of $25,000 from the profit on your goods and $25,000 of the fees that you charge your client. So your gross profit for this instance on this project is $50,000. But then from that, you have to subtract all of your business operating expenses for the project, right? And so this, you might find this a little bit of a difficult exercise, depending on how you track your expenses as it relates to a given project. So again, for your first time doing this, what I would say is, again, it's best efforts, right? So when it comes to your expenses, I would suggest that the largest one you're going to have is time on any given project. It's the hours that you spend. So whether you have staff or it's just your time, you really need to know how many hours were spent on the project. Because your profit, your gross profit on a project is what pays for your time. So, in theory, the fees that you invoice are going to cover your time. But I would suggest to you that when you start to do this analysis, you might get a little bit of a shock to find out how much time you're actually spending on a project versus what you thought you would spend on a project. And you might get a little shock in terms of whether or not you're actually making any money on your time, which is why it just further reinforces why you need to make money on your goods as well. So,
and I will say for anyone here who charges a fixed fee, you still need to, when you charge a flat fee for your service, you still need to track your time.
It's even more important.
And it's something that I fell off doing because I sort of thought, oh, finally, I can charge a fee and I don't have to charge my time. Even though people told me you still, track my time. Even though people had said to me, you still have to track your time. I'm like, yeah, whatever. Okay, yeah, you do that. I feel really good. So I'm charging more than ever before and I'll be fine. And then when it came time to can I afford to hire someone? I'm like, I don't even know how many hours goes into a project because we've not been tracking them. So now we've started tracking again. And it's really, really important.
And Rebecca, you raised a very good point. If you charge a flat fee, I would argue it's even more important to try to track your time because it's too easy to make an assumption that you've got lots of money and it'll all cover it. And it's easy to get into to forget that you have to be mindful of how much time you're spending. It's too easy to spend another half an hour or go to this other place to source or whatever. And before you know it, you're burning time like crazy. And you could, when you do the math after the fact, you might find that you actually didn't make any money at all on your fees because you spent too much time on the project. So after you have your gross profit, you've got to calculate the actual, what it cost you to do the project. And that the biggest component of that is going to be time. So it's the hours that you put in, and what I would do is say, so how much are you, if you have freelance staff, obviously, or any staff at all, you have the hard dollar cost that because you know how much you pay them, right? You know how much they make per hour. So you calculate how many hours they spent on that project times their hourly rate, and you'll know how much that cost. But you also have to factor in your time, and you have to factor in your time at a rate that you want to pay yourself. And again, what you charge your client and what you pay yourself are likely two different things. Because you may, in theory, I would imagine you're going to charge them an hourly rate if you charge hourly or not, it doesn't really matter. You have a thought in your head that says, my time is worth $150 an hour. That's what I'm going to charge. And you charge that because you know you have to take expenses from that to run your business. You have to pay yourself. You're going to have bills to pay, that kind of stuff. So when you're doing this calculation of how much did it cost, putting a dollar value on the time it cost to complete that project, you need to factor in what your hourly rate is that you pay yourself. Not necessarily what you charge to the client, but what you pay yourself. This might be a big aha moment for a lot of people to figure out what you actually pay yourself. And if you're not really sure, just look at, the money that you've taken out of the business over the year to pay yourself if you take monthly withdrawals, if you pay yourself dividends at the end of the year, different things. Figure out what your hourly rate is. And if you're not sure, pick a number. I mean, at this point, pick a number, because it's about getting into the rhythm of the exercise, So, I mean, maybe you charge.
So, Merilee, sorry, just a question about for people who are listening. Some people listening do have employees on salary, on payroll. So what do those, I think I know the answer, but maybe you can just reiterate, what do you do if it's not a freelancer working for you and they are an employee, and let's say they're on a salary of $50,000 a year? How do you attribute their time to that project?
Well, so, hopefully you're having your staff track the time that they spend on a project. And if they do, then that's great. You take let's say they make $50,000 a year, you divide that by if 20/80, if they work 40 hours a week, you divide that by 52 divided by the number of hours a week they work, and that gives you their hourly rate. And you multiply their hourly rate by how many hours they spent on the project. If you are not tracking the hours that the people are spending on the project, then I would suggest to you, because you're trying to do your historical, you're going to have to figure out some sort of guess. So what I would do, if you did 4 projects in the year, take their number, their salary, divide it by 4, and attribute a fourth of it to each project. That is the simplest way to do it. It's not, you're going to be too high on some projects,
very accurate,
low on others. But if you haven't been tracking any hours at all, that would be the simplest, fastest, and easiest way to attribute some of their salary to a given project. Mm-hmm. So, if you're not tracking hours, you're going to have to do some guesstimates, as we call it. If you are, then do the math and calculate it. You're going to find that the single biggest expense that you will have to attribute to any project is going to be time, the cost of time. Salaries, freelancers, your time, if you have any office admin who spend any time on the project. So you've got a new section. Think of a spreadsheet. Your next section is expenses. So first one is going to be anything to do with paying time as it relates to completing that project. And then there will be other expenses that may be specific to that project. Maybe you have parking expenses related to that specific project. Maybe you have, I don't know. I mean, you can attribute the cost of your car. You can use a percentage of, again, a quarter. If you have 4 projects in the year, but I'm getting into very specifics on expenses now, and I don't want to get complicated.
Could be things too. Yeah, just in general, it could be things too, like a client gift, flowers for reveal day, photography, if you want. I think it's still useful. We do keep photography in kind of a marketing section, but you could put photography. You could put definitely, like, maybe it's the 407 that you have to take to get to your project, but you don't want to bill your client for it.
Right.
The key is that these expenses are not expenses that are recoverable. These are not expenses that the client's going to pay for. So if you track your mileage and you bill your client, that doesn't fall in here in your expenses.
Right. That's right. Because you're getting covered for it. So these are expenses that are specific to the project. So you list them all down and then you total them. So you'll have a total expenses. So let's say we said that your gross profit was 50,000. And let's say the cost of time on the project was $40,000. And you're going to say, holy cow, that's a lot. You'd be surprised how quickly it adds up. Because if you're tracking time, your project could be 200 to 400 hours, right? If it's 400 hours, that's on, and so I'm going to do the math quickly because I'm having a bit of a brain cramp at the moment. But if you have 400 hours and you pay somebody $25 an hour, that's $10,000 for one person, right? So, but is there really, is it $25? You probably don't even pay yourself. You probably pay yourself a lot more than $25 an hour, right? So you have to really think about it. So let's say, you've got 50,000 in gross profit and your time that you've calculated is, let's say, $30,000. So now, and then you have other expenses that we talked about that go to the project. So let's say it's another 10,000. So now you've got 50,000 of gross profit. You've got 40,000 of expenses. So now your net profit on the project is $10,000. And the net is after we've trimmed the fat from the gross.
And we catch it in the net.
Yeah. Well, I guess you could think of it that way because that's in theory, that's the money that you have left for to reinvest in your business. That's your profit, right? Because you think about it, in your expenses for that project, you've paid your people, you've paid yourself, you've paid the project related expenses. But you may have other business expenses that you can't attribute to a specific project. If you have office rent and different things like that, right? You've got your general business operating expenses. That net profit from the project has to cover other things as well. So, and then what you would see there is, if you wanted to do the math, you would say that 10,000, I made a net profit. If I divide that to my revenue up at the top, the 100,000, that means you had a net profit of 10%. And then the one thing I would suggest, you go down and you do the calculations of the percentages, that then allows you to compare one project to the other to see if you have any kind of patterns as it relates to how profitable you are, both in terms of your gross profit, your net profit, your cost of goods sold, et cetera.
I think also too, it's worth doing because sometimes we have an inflated idea in our head of how profitable something's going to be. Yeah. Like you might get a project and you've charged more in your time than ever before. And you think, oh, shoot, this is awesome. It's going to be the best project. We're going to be so profitable. Oh, this is great. I'm not even sharing my discounts. But then in reality, construction drags on and on and on. And so your time or your team's time spent on that project, especially if you're not hourly, is much greater than you anticipated. And so in the end, it may not be as profitable as, say, a smaller project that was a quick in and out. Right. And so you start to see patterns and trends. And I know that I've talked about this here before. And for me, one of our great patterns and trends that Merilee, you've seen is that we make better profit when we have decorating involved in the project.
Yes.
For us, because we do not mark up our construction. We are not a design build firm.
Yes.
And I know design build firms would disagree because they make a lot of money on construction, but that's because that's their business model.
That's right.
For us, we can make a lot more money when we are supplying decorating materials, fabric, lighting, furniture, rugs, accessories, all that jazz. But that was only a pattern I saw from doing this analysis.
Yeah. Yeah. And that was a really interesting aha when we did the number of historical projects we went through. And then we identified, what's the projects that had construction and that didn't, and the profit margin at the bottom. And there is a clear pattern in terms of which are more profitable for your business.
Mm-hmm. And it's interesting too, because you might find that they're profitable. Maybe they don't align with you, or maybe they do. Right.
Yeah. But until you start breaking down your projects and looking at them this way, you will not really know your numbers. And so doing this will help you build your confidence in determining what your business model is, what you should be charging, and why you're doing and charging the way you are charging. And I would suggest to most people listening, that you'll get if you're passing on your trade discounts, if you do the math and you realize if you do this exercise and you realize the difference it will make per project, if you don't pass on those discounts, you're going to get the biggest aha moment of your design life, because you will see how much money you're leaving on the table, as the expression, but that's not going in your pocket. And you will be, I would suggest to you, very surprised if you do this work and you really think about attributing the appropriate amount of time and the cost of time to each project, and calculate the dollar value of that time, because I think you're going to get a big surprise. This just really helps you know your numbers. This helps you understand your business better, so that you're not just managing your business by what's in your bank balance, because understanding your each project will help you build a healthier bank balance. But that managing by the bank balance is one way to look at your business, but it is only one way. It doesn't tell you the whole story. So doing this kind of work, knowing your numbers, will tell you a bigger, better story, and will help you get more control over the future of your business.
Absolutely. And I think part of this is just taking the time to look at it, track it. And if anyone who's listening doesn't use a software like a Design Docs, a QuickBooks, a FreshBooks, a Mydoma, or anything like that, it might be time to start using something. You can use a spreadsheet, but again, I mean, we've talked about this. It's time consuming, right? So bring in a bookkeeper a few hours a month. It doesn't have to be a full-time hire. Bring in a little bit of extra help. It will be well worth it for you to see how much money you're making. And that net profit for a project, let's just remind everyone, that's before you pay rent, electricity, printing costs, all the things that really courses. And I want to add that, part of having a better profit, yes, you can keep the money and put it in your pocket and do something with it. But part of it also be that then you have more money to reinvest in the growth of your business.
That's right.
And that could look like something like a trip to High Point Market. Right?
Yep.
These are business expenses, but if you have that profit that comes out of those projects, eventually you could afford to fly yourself and maybe your team, go to High Point, stay at a nice hotel, pay for everyone's flight, the whole 9 yards. Maybe invest in an online course to up-level your skills as a business owner and entrepreneur, right?
Yeah.
Maybe it means you want to get an office space. Maybe you want to get a shared office space. Maybe it's a space of your own and you want to be able to afford the rent. That extra money, that net profit, you can pay it to yourself or not. But if you're someone who's looking to grow your business, after you've paid yourself, you want to still have money in business to reinvest. Maybe it's a new hire, right? And that's, again, comes back to how I feel about sharing discounts. That is thousands of dollars. We're not just talking a few $100 here. We are talking thousands of dollars that could be used to grow your business.
That's right.
We're not talking about let's be greedy and I want all the money for me. Hey man, if that's your thing, go for it. But if you want to grow and get bigger, you need money to reinvest in your business.
Yeah. But you said it absolutely correct, Rebecca. What we're talking about is just the profitability of the project. So that net profit for the project is then from there, the accumulation of all the projects, the net profit from all your projects in a given year, that's what pays your general business operating expenses, which I understand is going to be a future podcast in the series, understanding that.
Yeah, so that's going to be part 2. We talked about that. We're not going to get into that today because It's like
First,
a
you
bit of
have
head
to
spinning.
projects. Sorry.
Yeah. So we wanted to start. I wanted to start with projects because it's kind of the low-hanging fruit. It's really specific. It's tangible. It's easier to understand. Like once you get a handle on your project profitability, then, and what we're going to do, we're going to have Merilee come back. Thank you very much for part 2, which is going to be what does it cost to run your business?
Right.
And that's uncovering operating expenses and then running a profitability report on your business as a whole, because that's going to lay the foundation for future episodes talking about things like forecasting, how to know when you can hire,
Right.
what can you afford to hire, right? All of those things then come next. But today it's project profitability. Next time we're going to do sort of what does it cost to run your business? Because one of the comments that came out of our designers room coaching when Merilee was with us, which was really great, and I wrote it down, was from one of our designers. And she said, this has been really eye-opening because I realize I don't even know what my monthly operating expenses are. And I can tell you that was me. And it's pretty normal and it's pretty common if that's you. So do not be hard on yourself. We're going to help you guys. We're going to walk you through it with Merilee's help because she's the expert. And I just do everything she says and it works. And then I share it with all of you. Okay, I feel like that is loads. Thank you so much for that information, guys. I'm sure your heads might be spinning a little bit. I hope we helped clarify just some basic financial terms and how to figure out if a project is profitable. If you have questions, please feel free to post them in the Designer Meetup Facebook group. Send me a DM. And before we sign off, I always ask, Merilee, can you share one last nugget of wisdom with the listeners today?
One last nugget of wisdom. What it would be is don't be afraid of your numbers. Just get started. Pick a project and just get started. Don't anticipate what it's going to look like. Don't assume what the outcome's going to be. Find a project and just get started.
I love it. You're speaking my language. It doesn't have to be perfect. It just has to start.
Yep.
And that is where you little by little will start to figure it out and you will feel so much more confident in your business.
Yeah, absolutely.
Absolutely. Yeah. All right, lady. Thank you so much for joining me today.
You're welcome.
We'll totally have you back for part 2.
Thank you. It was fun.
All right. Wow. That felt good. I feel even more clear myself in how this all plays out. I can't even tell you for how many years I was so confused by all the accounting terminology. And if you thought this episode was basic and you've already got this, well, you know what? Good for you. I'm so proud of you. Keep sharing your knowledge with others. But for me, it took me a long time to know all of this. It took me a long time to actually take the time to do this because let's face it, as a designer, especially when you're running your own business, there's a lot of freaking stuff to do. There's contractors, there's fabrics, there's floor plans, there's team members, there's an office, there's tidying up, there's getting into the zone, there's, I don't know, client calls, client meetings, like it never ends. And so sitting down to actually pay attention to the numbers always for me fell off my to-do list because, well, it didn't feel like a priority in the moment. But as you can see from that conversation, it is very helpful to know this information to run your business. So I would love to hear from you guys how you felt about part 1. Was it too much information? Maybe it was too hard to follow. I know we created the PDF, but many of you listen while you're walking the dog or getting ready for work or driving in the car. So is that something that works? We're going to do a part 2. I think it's going to be about, we haven't recorded it yet, but I think it's going to be all about your company profitability and the operating costs. Because I do think it's helpful to see examples and to just have somebody kind of walk you through it. So it's industry specific. Let me know. I'd love your feedback. This is a topic like numbers has something I have shied away from sharing because I've never felt like I'm the expert. But I think breaking it down like this and sharing my learnings with you alongside my own operations manager is really helpful. And who knows, maybe we'll do a course about it one day soon. But for now, we're just going to do some podcast episodes, give you all kinds of free knowledge and wisdom and see if it sticks, basically. All right, guys, I hope you enjoyed that episode. We will be back very soon. Take care.